Hi everyone. We're going to cover Chapter 17, which deals with process costing, and I'm going to walk through this presentation. Okay, job costing and process costing really represent opposite ends of a continuum. On one hand, job costing systems are more involved with distinct identifiable units of a product or service. Examples would be custom-made machines, houses, a job shop would typically use job costing systems. Now on the other end of the spectrum we have process costing systems, and these are typically used where we are making a mass quantity of identical or very similar units of a product. Examples would be the chemical processing industry, food, probably pharmaceuticals would tend to use process costing systems as well. Now, process costing is a system where the unit cost of a product or service is obtained by assigning the total cost to many identical or similar units. Each unit receives the same or similar amount of direct material cost, direct labor cost, and manufacturing overhead. So very much it's an average cost type of concept. Unit costs are then computed by dividing total cost incurred by the number of units of output from the production process. Again, since we're taking total cost divided by units, the emphasis in process costing really is on a type of average cost. Now, there's a couple assumptions associated with process costing. First, direct materials are added at the beginning of the production process or at the start of work in a subsequent department down the assembly line. Another assumption is that conversion costs are added equally along the production process. Now, there is a five-step process associated with a costing allocation in a process costing environment. First, we summarize the flow of physical units of output. Then we compute the output in terms of equivalent units. Then we compute the cost per equivalent unit. Then we need to summarize the total cost to account for, and finally assign the total cost to units completed, and to also assign the cost to ending work in process. So, if you will, the two sort of global cost objects would be units completed. We need to assign cost to what was completed, and then also to what were the units in the ending work in process. With process costing, we tend to use a concept called equivalent units. It's a derived amount of input that takes the quantity of each input in units completed and in unfinished units of work in process, and converts that quantity of input into an amount of completed output units that could be produced with that quantity of input. In a lot of ways, it's thought of as a percentage of completion type of approach. Equivalent units are calculated separately for each input, and usually each input in a process costing environment consists of direct materials and conversion costs. Now, under the weighted average method of process costing, we calculate the cost per equivalent unit of all work done to date, regardless of which accounting period in which it was performed. And then we assign this cost of equivalent unit completed and transferred out of the process, and to the complete units still in process. Now, the weighted average cost is the total of all costs in the work in process account divided by the total equivalent units of work done to date. The beginning balance of work in process account represents work done in a prior period, and it gets blended with the current period cost or the current period activities. Now let's go over steps 1 through 5 using the weighted average method. First, we summarize output. Step 2, we compute the equivalent units. So in a flow of production, it's step 1, we're concerned with the physical units, and we need to either calculate or gather from our information systems what were the physical units we had in beginning, what did we start for the current period, and that gets us to the total units to account for. Then we need to determine of the units to account for, how many units were completed and transferred out. In this example, 90 of the 100 units, and that means that 10 were left in work in process. So 10% were left, and with that ending work in process, we assume that 100% was complete as to materials. That's a pretty typical assumption, because we assume all the materials had to be there to be worked on, but somebody on the floor or the system itself determined that only 10% is complete as to conversion cost. So we have total units to account for. In an ending work in process, we have 10 left, 100% completed as to materials, 10% left as to conversion cost. At step 2, we determine the equivalent units. Of the ones completed, the 90 units, all 90 of those equivalent units were complete as to direct material and conversion cost. Now, regarding the 10 units we had on hand in work in process, we consider 100% of that, which would be the 10 units, to be complete as to materials, but only 10% of the 10 units, or one equivalent unit, is done as to conversion cost. So when we consider the base as to work done in the current period, we have 100 in direct material, and we had 91 in terms of conversion cost. At step 3, we compute the cost per unit. At step 4, we summarize the total cost. So let's take a look at step 3. For our two cost components, direct materials and conversion cost, we have to gather from our accounting system what did we have in work in process and what were our current period costs added. Normally you would get this from various GL accounts. So we have $5,000 of material cost to account for and $13,000 of conversion cost. Now we've already determined the equivalent units from step 2, so we do our division to determine a cost per equivalent unit. And again, a cost per equivalent unit represents, if you will, an average cost per unit. So we have the 5,000 divided by 100 for material cost, and we have the 13,000 divided by the 91 equivalent units that we calculated from step 2, yielding $142.86 of cost per equivalent unit of conversion cost. At step 4, we summarize our total cost, which is $18,000. And finally, at step 5, we assign the cost to units completed and ending work in process. We do this by multiplying the equivalent units from step 2 by the cost per unit from step 3. So if we had 90 units completed and transferred out of material cost, we use the $50 cost per equivalent unit we computed from a prior step, and we also multiply the 90 units completed by the $142.86 of equivalent units per unit calculated from the previous step relating to conversion cost. For the ending work in process, we use the same rates that we've calculated per equivalent unit and multiply it times the the equivalent units we have stated at that value. So we had 10 units of equivalent units at $50, and we had one equivalent unit at $142. So the total cost to account for, again, the $18,000. And we've indicated which ones are completed and transferred out, and which ones remain in work in process. Okay, so the result of the process is two figures that we need. The amount of the journal entry transferring the allocated cost of units completed and sent from work in process to finished goods. So what we are looking for in all of this effort is a debit to finished goods and a credit to work in process, showing us the conversion of goods completed. The second entry we need is to determine the ending balance of work in process that will appear in the balance sheet. Now, lots of times when we're talking about equivalent units and process costing, standard costing comes up. Standard costing is a very popular method of accounting in process environments. And part of the reason for that is it's much a simpler approach than the one we've just illustrated. In theory, teams of design and process engineers, operational personnel, and management accountants all work together to determine separate standard costs per equivalent units on the basis of different technical process specifications for each product. Well, that's all well and good. In the real world, I'm not sure that's really what happens. What I've typically seen is you'll get one operational guy. You might consider him a process engineer. He may be technically trained as an engineer, or he may just be someone from operations that's been there a number of years or who's very familiar with the production process. But typically what I've seen is you have a guy from manufacturing work with a cost accountant to develop standards per equivalent unit or per process for material or for conversion costs. Sometimes in a standard setting, the conversion cost will be split into a labor component and then in an overhead component. And in other times, that standard costing on the manufacturing overhead may even be split into a number of overhead pools. Typically there might be a fixed cost pool or a variable cost, but there may be a number of pools. I've seen a variety of different ways standard costs are done in practice. Okay, now if you're using a standard cost system, they replace actual cost in the equivalent unit calculations. And the whole idea of standard cost is it makes costing the process go through much easier because you have a predefined standard that you simply use that cost times the quantity where it appears. You do a quick comparison to what actual was and determine if you have waste or variance to flush out, typically to a P&L. We'll get into standard cost much later. In our last slide dealing with process costing deals with transferred in cost. Transferred in cost are costs incurred in a previous department that are carried forward as the product's cost when it moves to a subsequent process in the production cycle. So the only time you have transferred in cost is when in your costing system you have separated or segregated various processes so that there is more than one. Then we have to deal with this issue of transferred in cost. If we had 4 or 5 different processes, we may have 4 or 5 transferred in costs that need to be moved as a product cost moves through the cycle, and we need to account for the work performed in each area of the process. One of those 5 areas, let's say, as an example. They're also called previous department costs, and we would make journal entries to mirror the progress in production from department to department. Typically, if you've got this situation, you may have work in process accounts for every production area. You may have process 1, process 2, process 3, with 1, 2, and 3 having names that really represent the production steps that exist in your environment. Transferred in costs are treated as if they are a separate type of direct material added at the beginning of the process. So usually they're accounted as 100% equivalent when they transfer in.